So this wallet here put in about 150,000 bucks into the DeFi liquidity pools, and they've earned over $20,000 in earnings, and they're up over $19,000 compared to if they were just holding onto their assets in the market. Now, I'm here in Abu Dhabi and I wanted to take the time to come on and show you how this is even possible in the first place. So if you're unfamiliar with the liquidity as a service business model, I can explain it to you. So there's these decentralized exchanges, Uniswap and Orca, and these are platforms where the traders go to swap one cryptocurrency for another. So say someone wants to swap 3 Ethereum, then in return, they want to get Arbitrum, they're going to have to pay a fee. So as you can see, you hit get started, scroll down and look. In this case, they'd be paying about a $20 fee. And what's cool is that this fee, a percentage of it, is getting paid out to the people who are actually supplying liquidity to the decentralized exchange. So in this case, that could be me and you. But how do you go about finding these positions that aren't just showing high APR, but are also showing signs of consistency and longevity? That's the key here. Plenty of people make videos about how to find high APR positions, etc. But we're here to find high APR positions and also find positions that show signs of consistency and longevity. So if you're over on Uniswap, you can go ahead and view pools. You can scroll through and see some information about liquidity pools, but there isn't much to look at. You can't even see how correlated the assets are along with other features. For example, if I click on DAI to USDC, I can see some pretty basic information about the pool, but I can't go very deep into it. Same thing goes over on Orca. If I go to the pool section, click on the liquidity pool, look, I can't see much information about the pool at all. So to find these positions, we'll be using Metrix Finance. It's the best software for finding these positions, also simulating your returns to see what type of money you could be making. And then third, building out your portfolio. I'll leave a link in the description down below if you want to claim a trial to the pro version, so you can go ahead and check that out if you'd like. We can go to the discover section here, and remember, our goal is to find pools that show signs of consistency, longevity, and also have somewhat high APR. So let's go to exchanges. We can go ahead and select all and be broad. Same for networks. We can be very broad for this video. First of all, we can add some parameters. We can go to fees APR, look for pools that have higher than 20% APR. Now, if it's displaying like 25% APR, the APR can raise if you tighten your price range at which points you're supplying liquidity. So whatever the fees APR is displayed, it can be higher realistically. And then let's go to TVL. Let's look for pools that have higher than $3 million in TVL, because typically pools that have very low TVL aren't going to be consistent and have lots of longevity. And when I say consistent, I mean pools that are consistently paying out solid amounts of fees to liquidity providers. So we can start scrolling through. I'm not going to pay attention to the meme coin pools like Pengu, MAGA47 to Wrapped ETH, etc. But we can look at pools like USDT to Wrapped ETH. We can look at pools like on this page, Wrapped ETH to Uni, Wrapped ETH to Link. So I see Wrapped ETH to Link. It's showing 70% APR. That's very high, but also a lot of TVL. So off the bat, it looks solid. We can go ahead and simulate it in a new tab and dive deeper into the position. The first thing I want to do is check how correlated the assets are to each other. Because if you're just on Uniswap or Orca or the decentralized exchanges, you don't have this data. So we can scroll down and see, in this case, based on the past 30 days of data, these assets are showing 96% correlation. That's very high and a great sign to see. Remember, I'm not a financial advisor. I'm not telling you what you should or shouldn't do with your money. I'm just showing you my opinion. So now we can scroll down and we can see other information about the pool, such as volume history. We can see fees per day along with volume per day. This is very important to look at. If you're looking at a pool and it's showing very low volume per day and very low fees per day, you're probably not going to want to take on exposure to it. So we can change our max price and min price at which points we want to provide liquidity for. So if we go ahead and lower the max price a bit to about 121 to 182, we're looking at about 87% APR. And we can see a simulation of how much money we're estimated to make based on the past 30 days of data. So we can go ahead and type in our deposit amount. Say we want to deposit 10,000 bucks into the pool. We can see our estimated earnings per year, per month, and per day. So this position is looking solid. And if you're looking at a position like this, the next steps would be to look at the assets involved. Look at Wrapped ETH, look at Link, or whatever the assets may be. See, do you want to take on exposure to the asset? Check what role they play in the DeFi ecosystem. And if you want to take on exposure to the liquidity pool, you can save it to your portfolio for later. We can go ahead and diversify our portfolio, look for some other positions, such as Wrapped ETH to Uni, or some stablecoin position. We can look at Wrapped ETH to USDC, almost $500 million in TVL. Let's go ahead and simulate that. With positions involving stablecoins and blue chip assets, we can't always expect a huge APR, but it could be somewhat solid. So we can go ahead and select our range. If we go with a min price of about 2,367 and a max price of about 3,390, we're looking at about 75% APR. So that's very solid still, but this is still a very tight range. So realistically, I'd probably want to make the range a bit wider, something like this, maybe even a bit more. I'm going to be looking at about 60% APR. And remember to click the link in the description down below to check out Metrix Finance. You can claim a trial to the pro version, so make sure to take advantage of that. And remember, there's risks to the investing such as divergence loss, so make sure to do your own research. But here we can see the volume and fees for this position. There's a ton of fees every day. Look, even on the low days, there's still over $50,000 in fees. And on the high days, it's well over hundreds of thousands of dollars in fees. And of course, this position is going to show very low correlation because it's a stable coin paired with a blue chip asset. So think about it. If wrapped Ethereum goes up in price, USDC shouldn't move. So they're going to have very low correlation or pretty much no correlation at all. Next, I'll show you how to actually enter a position. So for example, say you're looking at Orca, Solana, say you're looking at a USDC sold position or Jito sold position. We can go with this USDC sold position. So you can go ahead and simulate it and then find your range. And I'll show you how to enter the position. So say we have a min price of 139 and max price of 223. We're looking at about 221% APR. But this is a pretty tight range, so realistically, I'd probably want to move it a bit. And Solana has been very volatile recently, especially this past month. And as you can see, there's days showing very high volume that could be spiking up the APR prediction. So instead of looking at the past 30 days of data for our calculation range, we can look at the past 15 days of data. You can see our APR dropped a bit, but it should be more realistic. So we can go ahead and find our min and max price again. And now with this min and max price, we're looking at about 109% APR. So say we want to enter it. What we would do now is go over to Orca, the Orca website, and then at the top, you could go ahead and click pools. Now you would find the pool you want to enter. In this case, it's Solana to USDC, and you can see it's the 0.04% fee tier. We see that over here. You could go ahead and click on it. And then we would go to liquidity range and we're going to select custom because in the Metrix Finance software, it's so cool that it allowed us to find the price range at which points we want to provide liquidity for. So we can go here and copy our min price here, which is 129, copy it, paste it, and then our max price. We'd go ahead and type in 238. So copy it and then paste it here. Now it's going to show our range, estimated yield per 24 hours based on the past 24 hours of data. And then we would deposit our assets. Now, say you just have Solana and you don't have USDC. You can turn on auto swap, deposit your Solana, and it will automatically swap some of that to the right amounts of USDC. So I recommend using the auto swap feature, but you don't have to. So then from there, you can deposit your position and then you will be deployed into the pool. Once you're deployed into the pool, you can go to the track section. You can see your current liquidity, your earnings, profit, and loss. In this wallet I have pulled up, you can see that their assets have depreciated. But since they're in these liquidity pools earning earnings on their assets, they are actually up and are profitable. So this is really cool to see. Make sure to subscribe and hit the bell if you learned something in this video, and check out Metrix Finance in the link down below. I'm sure you'll love the trial.